Bloomberg Tech is live from the heart of Silicon Valley with Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, Marvell and Google expand a partnership for chip development, with Marvell giving the search giant the right to buy as much as $12.2 billion in stock. Plus, SK Hynix plans to buy back $29 billion of shares and return more profits to investors to stabilize its stock after falling more than 50% in 2 months. And startup Fuse raises $100 million to bring commercial nuclear fusion energy to the US and its allies. We're going to speak with the CEO. So 90 minutes into the US trading session, and technology stocks are under some modest pressure. The big catalyst in markets this morning was the Treasury stepping in with a plan to boost buybacks of longer dated bonds. You look at yields coming down across the curve, but on the 10-year in this case, chip stocks actually lost momentum and now underperforming in that case. One outlier in that story of the chip sector is Marvell, giving Google the right to buy more than $12 billion of stock, but it's about a deeper agreement for cooperation on chips, chip design across a number of facets. At one point in the session, Marvell on track for its best day since the first week of June. Let's get more with Bloomberg's Ian King, who leads our semiconductor coverage out of San Francisco. This is custom silicon in a way. Marvell is another name that Google's looking to diversify the chips it has access to.
Yeah, I mean, the devil is in the details. If you read the list of products that Marvell might possibly be making for Google, they're kind of the backup singers in the band, but there is one important thing in there, which is the AI accelerator. This is the type of chip that NVIDIA makes. It's the cornerstone of NVIDIA's product
lineup.
And therefore, this shows, or perhaps shows, that Google is becoming more ambitious about its own chip efforts and is looking to use Marvell to help it.
In the most basic terms, we know about the Google TPU, which Google has worked on with Broadcom. So Broadcom helps to design and then take that chip to production. Does Marvell do the same thing? It basically is a partner, but Google would still sort of own the IP of the chip.
Yeah, no, I mean, these two companies, Marvell and Broadcom, are the absolute leaders in this market, where if you are whatever kind of company you are, you have a bright idea, we need our own chip to do this thing, but you don't really know how to do it, right? So you go to them with your bright idea, with some of your IP you've already developed, and they package it all together, and then they take it off to TSMC and get it manufactured for you.
And I'm not going to ask you this question unfairly, but circular financing, I mean, this arrangement is basically a warrant to give Google the right to buy stock, along with, in parallel, a partnership to design multiple different chips.
Yeah. Two ways to look at this from the perspective of the chip makers. Look, we're giving, in this case, investor money to a valid customer because, this expands our business. It's a good use of our resources. The other way to look at it is, well, hold on a minute. If this is such a good deal, why are we giving something back to our customers?
Using
Two
the
ways
technology.
To look at it.
And of course, this is something we've seen with a number of names in the chip space when it comes to AI accelerators. Bloomberg Ian King, thank you very much. Let's stick with this Marvell and Alphabet story. Allspring Global Investments portfolio manager Matt Wittmer's with us, and in Matt's ETF that he oversees, Alphabet's a number 3 holding, I think. This is a diversity of silicon story. It's a finding chips any way you can story. But as somebody that is focused on tracking Alphabet, how do you interpret it?
Yeah, I think it's first of all, thanks for having me. But I think it's an opportunity across the board to make sure that you have enough supply. I think that's really what gets down to the nuts of it, is just making sure you've got tons of demand out there, and you've got to be able to make sure that you can meet supply, and having a broad-based supply chain, I think, is going to be helpful in the long run.
Matt, you subscribe to the 5-layer cake thesis of the world of AI. Alphabet sits across a few of those layers now, if you think about it from the chip perspective. How do you feel about the circular financing question in this case?
Yeah, no, I think it's important. I think it's a key debate that's out there, and whether or not this AI financing ecosystem is truly building some genuine capacity, or if we're just recycling capital to some degree. I think only time's going to tell. And for us, I think cash flows and ROIC are going to be important KPIs to watch kind of going forward.
I'm looking at the composition of the ETF. So there's the 5-layer thesis, but semiconductors are still a kind of important part proportionately. What's your thinking there?
Yeah, look, I think the AI opportunity is broadening across all five layers, and I think value creation is going to expand across those mega cap infrastructure and implementation into real world applications. I think concentration could limit some of the exposure to a full kind of AI opportunity set. So we've been advocating for a barbell approach, just to make sure that you're maintaining kind of core exposure to incumbents, while also kind of adding some of the edge beneficiaries. I think is really going to help capture multiple phases of growth and really elongate the cycle for investors out there. And so even in that one spot on the infrastructure or chip semi, we want to make sure we're broadening our exposure there, looking at NVIDIA, AMD, Lam, Broadcom, ADI. So we've got a lot of exposure with just inside that one layer of the AI cake, if you will, from that perspective. So we want to make sure we're spreading our bets across everything right there.
We're talking about the Allspring LT Large Core ETF, and you guys talk about the holistic portfolio approach. There is more than just those chip names. Where is the next phase for you that you need to be focused?
Yeah, I think as the AI infrastructure builds out, I think obviously it's been rapid, capital intensive. That's really benefited the hyperscalers and the infrastructure layer. As that build progresses, spending is going to increase, and that's going to shift towards the implementation phase of the AI value chain. I think industrials is a really interesting area where you'll start to see some of that. There's a lot of investors that are seeking exposure that combine both kind of secular and cyclical characteristics, and I think industrials can take care of a lot of that. There's a lot of AI use cases that are starting to spread across capital goods, and diversified industrials is significant. It's expanding. They're doing that with enhanced product design and engineering, factory automation. You think about labor productivity. They're even using predictive maintenance services, and there's even dynamic pricing models in there that I think are going to help a lot.
Matt, in a few minutes' time, we're going to talk with the team about the momentum in Anthropic for the third day in a row. And there was a really interesting point in your notes about Salesforce. The idea that sometimes a software or technology is entrenched and getting people to change their habits is hard. You see Salesforce being in a pretty good spot. And the idea that bespoke solutions from the frontier labs that will come for them, you're not so sure.
Yeah, look, they are fully embedded with their customers. They've got great access to customer data. They've got that operational scale, and I think you're going to see AI only enhance their product set. If you think about what's going on with Agentforce, I think they're really well positioned to be able to not only keep those clients that they have right now, but I think the product set is going to get better. Like I said, fully embedded inside their customers. So I think it's just that access to data. If they can keep that, I think they're going to be in a very good position to produce some really good results here going forward.
Matt, what I don't see in the ETF is any of the memory names. Why?
Yeah, no, it's Micron's an interesting example of that. It's a name that we've kicked the tires on. Look, we're trying to build portfolios of high quality companies that for some reason are inefficiently priced relative to their long-term growth prospects. We look a lot at cash flows. Cash flows are really, to us, what can drive the true value of a company is that future stream of cash flows. Micron's had, over the last 5 years, they've had several quarters where they've had negative free cash flow, and that's kind of kept us away.
I think I'm right in saying that Allspring LT Large Core ETF, slight outperformance relative to the S&P 500 year to date. But what are the main drivers for you right now?
Yeah, once again, it gets back to the company's ability to generate cash and what are they doing with that cash at the end of the day. So we really want to make sure we understand what companies are doing. They're driving those cash flows back into the core fundamentals of the company. They're then investing in emerging growth opportunities. And then finally, they're shareholder friendly. So kind of in that order. So we're long-term investors. We have a consistent, disciplined approach, and we're focused on the fundamentals.
Matt Wittmer, Allspring Global Investments Portfolio Manager, ending us on memory, shareholder friendly, and cash. Let's talk about shares of SK Hynix, particularly the ADRs. This is the US listed shares. The company is making a major move to win back investors after a sharp slide in shares, unveiling a $29 billion share buyback plan while pledging to return more of its free cash flow to shareholders. For more, let's bring in Bloomberg Executive Editor for Tech, Peter Elstrom. This is more about the Korean listed shares, but it is an effort to stabilize the stock, and it's multifaceted. What is SK doing?
Yeah, that's right. As you mentioned, SK Hynix is talking about buying back $29 billion in stock, 40 trillion won. And there are a couple areas to lean into here. First of all, the timing of this. Often when companies announce these kinds of buybacks, they're talking about over a year, even over 2 years. SK Hynix is talking about buying back these shares by mid-November at this point. So it's $40 billion being or $29 billion being allocated very, very quickly. This also may just be the beginning of their returning cash to shareholders. There may be more buybacks in the future. What they said is that they're going to increase the amount of cash that they return to shareholders in one form or another to more than 50% of their free cash flow. We did the math on that. SK Hynix is making a phenomenal amount of money right now. That could total something like $170 billion over the next 2 years. They're making a lot of cash because of these increases in the prices of memory chips.
They'd also say post-buyback they'd cancel those shares. And I remember when they did the ADRs, they issued more stock, which really upset Korean retail investors. They felt like they were getting diluted. What's amazing is that SK is also on the hook for a lot of cash, right? They're expanding in Korea domestically. And as SK Group Chair Che told me, they have ambitions to the United States as well.
Right. Yeah, you raise a good question. Why would they raise this money in the United States through the ADRs and then also dish it out in Korea? There are a couple of things going on here. First of all, there was a bit more bullishness in the AI market a few weeks ago when you talked to Che about their listing there, and they were able to raise that money. They also want to globalize their investor base. They want to get more U.S. investors. They want to make it easier for U.S. investors to buy into their shares in particular. Also, there's a mismatch in the valuations right now. The ADRs in the U.S. trade at a higher multiple than the Korean shares. So effectively what SK Hynix is doing here is they've sold shares at a higher multiple in the United States, and they're buying back their lower cost shares in Korea. So they're taking advantage of this arbitrage trade, which I think we've talked on this show before. Individual investors are not able to conduct that arbitrage because of some technical reasons. There's a cap on what they can convert, but SK Hynix is able to proceed with that.
Bloomberg's Peter Elstrom is going to be back later in the hour. We're going to talk more about the big stories from Asia Tech later on. Coming up, ahead of its potential mega IPO, Anthropic's credit facility is set to exceed $10 billion. We have the details next. This is Bloomberg Tech. Alphabet paid just under 7% to borrow longer-dated funds in its debut Australian dollar bond offering, its highest ever, underscoring how hyperscalers are facing rising costs to finance their AI ambitions. The multi-part deal saw Google's parent company selling $3.9 billion of debt, with the yield on the 20-year tranche. The rising costs also underscore a global trend of surging borrowing costs as long-end government bond yields are at multi-decade highs. Another top story is talks of going public continue. Anthropic's revolving credit facility is anticipated to rise above its approximately $10 billion target, according to sources. That would be a substantial increase over a $2.5 billion 5-year facility Anthropic secured last year, though the sources say discussions are still ongoing. Bloomberg Sridhar Natarajan joins us now. There's something really interesting here, which is basically, based on our reporting, Anthropic is proposing to extend the facility. It's the response of the banks who are trying to get in place for a potential IPO that I find most interesting. Explain that.
Pay for play, did someone say? Look, all kidding aside, it's become the reality of modern-day IPOs. The balance sheet play has become such a critical component. Anytime that a company is looking to go public and banks that are angling to find a role on a public offering will try and show every bit of support that they can for the company to show that they're committed to it and want to make sure that they snag an important role in the IPO. And as have been reports that started a few weeks back that Anthropic is in the market trying to expand its revolving credit facility, the feedback we're hearing from the market, from the banks, that there is a lot of interest. A lot of people want to sign up. What is the final amount that Anthropic will end up with isn't clear. What they would want to cap it at isn't clear. But what is clear that there is certainly enough demand out there and enough willingness for Anthropic to be able to announce a new revolving credit line that could be well in excess of $10 billion if they wanted it. And I know every time you hear questions about or headlines about a revolving credit line or a credit line, there is some level of concern. Why is a company taking on new borrowings? But it is very important to understand that this is not new borrowing. This is liquidity, not leverage. This is cash reserve to impress public market investors. It is to show that this company can withstand any sort of financial surprises. And that's a show of confidence. And that show of confidence especially helps right in the lead up of pitching these public market investors on what could potentially be one of the biggest, if not the biggest IPO of all times.
I appreciate that, because $10 billion is a lot, and people do see the word credit facility or revolving credit line and wonder about it. Do we know where the ranking on banks is right now with Anthropic, like the players that are jostling for position?
I think even unlike sort of SpaceX, where even weeks before the IPO, we got a much bigger list of the expanded roster of banks on the IPO, this list has remained tight. It's, I believe, Goldman Sachs, Morgan Stanley, and maybe one or two others. But closer to the IPO, you can be rest assured that this list will expand. But they're keeping the information tight for now. But as we get closer and closer to that public offering, to that public listing, you will, in the final lineup, definitely see a much bigger list of banks that will perhaps go well over 10 banks, if not much more.
This is one of the must-reads across Bloomberg this morning. Bloomberg, Sridhar, Natarajan, thank you very much indeed. When it comes to setting the rules for AI, many CEOs are being accused of overstepping. Fei-Fei Li, CEO and co-founder of World Labs and the so-called godmother of AI, weighed in on the issue in the latest episode of The Circuit with Bloomberg's Emily Chang.
Some of the most powerful CEOs in AI right now have been accused of having God complexes because they seem to think they know what's best for humanity. What do you think of that term?
I think it's dangerous for any individual to think they know better than everybody else. As a CEO, as an entrepreneur, our founding premise is we are here to contribute to the society and to empower people. It's not our position to make every single decision for people.
But isn't that the path we're on? I mean, these are really powerful people.
I think it's too early to tell, Emily. I'm not being naive. I know what you're talking about. I also have my concern. I don't think having God complex is constructive, and I wouldn't want to do that myself. But we have a democratic society. This is another reason I think our civil society should not give up on AI. We need the voices. We need the collective governance. But let's not throw the baby with the bathwater. The governance shouldn't be let's stop AI, because this is a technology that can discover cure for diseases, can empower students and teachers, can help our elderly. So that's the baby here. But right now we are in a very messy period. This is also why I feel personal responsibility to speak the truth I believe in as a scientist and an educator.
That was World Labs CEO Fei-Fei Li speaking with Bloomberg's Emily Chang. You can find the full episode on YouTube and on the terminal, or watch it tonight on Bloomberg TV at 6 p.m. Eastern. Okay, coming up, big tech breaks out the charm offensive. Will it be enough to win over local resistance to millions of dollars of data center projects? We have the story next. This is Bloomberg Tech. Let's go over to New York, where Bloomberg's Yahaira Anand is standing by. Yahaira, take it away.
Hi, Ed. It's time now for Talking Tech. First up, TikTok is exploring a feature that would allow users to send each other money in direct messages, a move signaling the app's expansion into financial services. The evidence of the feature, which is already available in Southeast Asia as TikTok Pay, was found inside of code hidden in the current version of the platform's American iPhone app. Plus, Amazon is planning to expand its drone delivery operation to at least 5 more states in the coming months. Prime Air drones will begin delivering packages in several new markets, including Chicago and Atlanta, with the expansion eventually reaching nearly 500 U.S. cities and towns. That's a 6-fold increase from its current footprint. And the AI cloud company Nebius is set to be pricing the sale of $4.5 billion in convertible bonds Wednesday today after the closing bell. Sources say the firm is marketing the bonds maturing in 2030 with a 0 to 0.5% coupon and 40 to 45% conversion premium. Ed?
Thank you, Yahaira. Big tech is turning on the charm, spending on upbeat ads, donating to local charities, and making new concessions, all to win over local communities who are concerned about the data center build-out. Bloomberg's Brody Ford, part of the team that dug into this in another must-read on Bloomberg today. There's a data point that jumps out at me. In the first 3 months of this year, $130 billion worth of data center projects were basically put on hold or disrupted by local resistance, more than all of last year. Take that and tell me the story.
I have been shocked about every couple months. It feels like the data center opposition just keeps growing. It's become this really bipartisan issue that cuts a lot across a bunch of different ideologies. I mean, folks effectively are worried that it's going to mess up their power or their water, or they're just upset about AI, and this is kind of the most tangible thing they can fight. And fight, they have been, right? I mean, 75 data center projects delayed in just 3 months. And we got to remember, there's so much money tied up in each of these centers in many cases that even, say, a 6-month delay can mean something pretty material for these companies' earnings. And so tech companies were used to being just, they could walk into cities and get tax incentives, and they've really had to change their tone and kind of put on that smile.
Yes. You detail case studies in Michigan and Georgia, but there's one case study, Project Jupiter, Oracle's project in New Mexico.
Yeah.
What do we need to know?
You ask anybody about Oracle and what their vibe is. I mean, it's Larry Ellison. It's win at all costs. They're not nice. They're not cuddly. But now all of a sudden, Oracle is sponsoring rodeos and food kitchens and archaeological parks because they're going on this whole charm offensive saying that Oracle is going to be a great neighbor and this data center is going to mean good things for New Mexico. So they've committed serious amounts of money to a lot of local organizations and had to put on a PR campaign like I have never seen Oracle do in, my years covering the company.
That is a very big project, 2.45 gigawatt facility, part of a $300 billion computing deal with OpenAI. It is a must-read on what's happening in data centers ahead of the midterms in this country. Bloomberg's Brody Ford, thank you.
Thank you.
Coming up in the program, is the AI chip crunch finally making its way from data centers into the British shopping basket? We're going to speak with Yael Selfin, Vice Chair and Chief Economist at KPMG, next on chip inflation or chipflation. Halftime here in San Francisco. A lot more to come in the program. Stay with us. This is Bloomberg Tech. Welcome back to Bloomberg Tech. Let's take a look at today's big number, 460%. That's how much Unitary Robotics shares surged during its Shanghai trading debut. Back with us, Bloomberg's executive editor for tech, Peter Elstrom. This was a big moment for humanoid robotics, a big moment for the public markets and humanoid robotics, and an astonishing number for the first day of trading. Give us everything we need to know here.
Yeah, that's exactly right. Yeah, Unitary Robotics is one of several humanoid robotics makers within China. It is the first to go public, raise money from the public. In the China markets, they tend to have these big first-day pops, but even by those standards, this is quite a big one, 460%. As you say, the market cap of the company now is around $50 billion. It's a quite big company. This company was founded by a 36-year-old Wang Xingxing. He's become quite a celebrity within China, within the China tech circles in particular. He's sort of seen as one of the new generation of tech up-and-comers after Jack Ma at Alibaba and Pony Ma at Tencent in particular. This is quite a strong debut for them. And the Chinese robotics companies are really gaining a lot of momentum at this point. You see a lot of state support for these companies. You see some of the physical feats that they've been able to do. Yes. They run half marathons. They have robot competitions. This weekend, in fact, there's a robot conference where we're going to see some new tricks.
So a lot of the headlines are about, the Chinese humanoid that can do backflips, as we are demonstrating on screen right now. But the figure that strikes me is production to date, 18,000 units as of July. This seems real. It seems like they're shipping to the real world.
Yeah, there are tens of thousands of units being shipped by Unitree and some of their domestic competitors. Agibot, in particular, is another one. We recently did a market report on the market share, and there's something like 95% of the humanoid robotics being produced in the world are being produced by Chinese companies at this point. So it's a huge advantage, but it's also very, very early days. Tens of thousands of humanoid robots is not that many compared to what we expect to see in the future. Elon Musk, of course, has talked about how every person should have at least 2 of them at some point in the future. So it's early days. Tesla, of course, is going to compete in this market too, but what we're seeing with the Unitree debut, and we're going to probably see more IPOs from these companies in the future, is that they're gaining a lot of momentum in China at this point. They not only have a market that's ready for them and state support, they've also got a supply chain that allows them to manufacture these at some kind of volumes.
Bloomberg's Peter Elstrom, and again, Unitree Robotics trading debut Shanghai 460%. Unitree's blockbuster debut highlights the growing appeal of China's onshore markets. So what does that mean for Hong Kong as it competes for listings, investors and liquidity? Bloomberg's Min Lo put that question to HKEX CEO Bonnie Chan.
It's a competition, right, between HKEX and the few stock exchanges on the Chinese mainland. I actually see our relationship quite differently. It's complementary. Well, on the face, it seems that we're competing, right? And that's probably based on the assumption that, a company can only IPO once in their life. However, I think you have picked it up in many of your previous reports. There is a growing trend of companies getting listed on both the Hong Kong market as well as the Asia market. Now, some of them have chosen to do A share listing first and then come to Hong Kong for an H share. Others have done H share listing and then return to the Chinese mainland for their A share. I think regardless of whether, how companies want to sequence it, what they are pursuing, when they want to, when they decided to list on both markets, is really expanding their shareholder base.
You launched the HKEX Tech 100 Index last year, but less than a year on, you're looking at making some adjustments.
Correct.
Could you tell us more about these adjustments and why you're making them?
Right. Well, first of all, let me tell you about our index business and why we're doing it. We certainly think that as more focus are turning back to our market, there is a very strong demand from the investors to want to get access to these indices so that they can have better benchmarking and referencing, and therefore, first of all, we do believe that Hong Kong as a market certainly will benefit from a bigger variety of indices, and therefore, given how close we are to the market, we do believe that we are in a very unique position to develop our indices.
How do you differentiate from the existing benchmarks like the Hang Seng, though?
Oh, well, it's quite different, I would say. So the name suggests it's HKEX Tech 100 index, right? So the underlying is 100 stocks, and we deliberately make it in a way so that it's more diverse, which we believe is more representative of the makeup of our market.
That was HKEX CEO Bonnie Chan speaking with Bloomberg's Min Lo. This morning, we went looking for chipflation in Britain, and we may have found a few breadcrumbs. UK inflation climbed to 2.9% in July, a 4-month high. The big culprit was energy bills rather than AI, but buried underneath the headline, personal computer prices jumped 5.9% from a year ago, their fastest rise in at least a decade. Let's get more with Yael Selfin, chief economist and vice chair at KPMG. We were looking for chipflation. Does this jump in PC prices for you constitute chipflation?
I think we need to look at it more broadly because ultimately we are seeing higher costs of AI more generally. So we would have probably seen some of it potentially in the increase in services inflation, or at least part of it, the core service inflation, that's possible. When it comes to the actual products and the chip influence, I think that is probably something that we shouldn't overestimate, because first of all, those products represent a relatively small proportion of the inflation basket. And secondly, also that increase in the cost of chip also represent a higher quality most often, which is accounted for when you look at measuring inflation.
One of the things that we tried to anticipate was the idea that, the UK economy has to import everything from consumer electronics to the compute that goes into data centers. How much is that a factor, the sort of structure of the economy in the UK from an import-export perspective?
Well, the most important part, that the elements that impacted inflation this month, but not just this month, is household energy costs. We had the Ofgem cap increased at the start of July, and that was a 13% increase in energy costs for households, essentially, just looking particularly at the cost of gas. So that was really the key driver of the numbers this time around.
Yeah, what's fascinating about the conversation we're having, we're talking about UK inflation data and having an economics discussion where I think I can ask you about software, because where AI inflation is most pronounced in some respects is the pricing of frontier models. Is that something that an economist looking at the UK economy now has to model for?
Well, we are looking at it. We actually got an index of the cost of AI, looking at different models. So we put them all together. And there's a big disparity between the cost of different models, with essentially what it means is that increasingly companies will need to differentiate which models are used for different activities in order to try and control that increase in cost of AI.
Yes. Yeah, in the United States, one of the stories that came out of capital expenditures of the hyperscalers is, CapEx goes up because the cost environment also goes up, right? There is labor inflation, construction materials inflation, all associated with the data center build out. Is that reflected in the UK economy as well?
I'd say what we've seen in the UK and more broadly in Europe is quite different to the US. The scale that you see in the US has not reached Europe so far. So the pressure on resources like energy and water to some degree is not as high as where you are.
Let's look to the future. Is it likely that chipflation shows up in the UK economy or in Europe? And if so, where would that be most pronounced?
I'd say it's less likely to be the major cause of inflation in the UK or Europe. Where it is going to be more pronounced is those companies and services that are heavier users, essentially. So it would be mainly services that are heavier users.
It's not often that we discuss monetary policy on this programme, it's Bloomberg Tech, nor discuss UK monetary policy. But how conscious is the Bank of England of the impacts of AI when they present their view of the economy and their review and decision of monetary policy as it stands?
I'd say it's fair to say that this is not one of the things that they're looking at the moment. What they're worried about at the moment is inflation expectations. They're worried about the state of the labor market. They're worried about the crisis in Iran and the higher energy costs that are potentially more impactful in Europe than they are in the US. And they're worried about how that will be transmitted and whether we'll see this escalation, a further acceleration in inflation, similar to what we saw around 2022. So AI on its own is probably not something that they would look at a lot at this stage. There's other things that will worry them more. Or they wouldn't necessarily see it as an alleviating factor either, in terms of the increased productivity and supply as a result of it.
We went looking for chipflation in the UK I don't know that we found it. Yael Selfin, KPMG Vice Chair, Chief Economist, thank you very much for your time. Coming up, we're going to speak with the CEO of Fuse about the startup's latest funding round and the path to commercializing nuclear fusion. This is Bloomberg Tech. Startup Fuse has raised $100 million to help it in the goal of bringing commercial fusion energy to the US and its allies. Its facility in Albuquerque, New Mexico, it says, is the first new radiation testing facility in the US in decades and is preparing to serve customers. Btaiche, Fuse's founder and CEO, is with us. Really interesting round. I think we'll get into what the capital is needed for, and what the challenge is with the technology. But let's start by introducing the audience to Fuse. What is the technology that you're working on, and why is yours different?
Yeah, thanks for having me here. Great to be here today. So Fuse, we started Fuse as the mission to accelerate the world's transition to fusion energy while also safeguarding humankind. And we think that the future of fusion is depending on building new generators at a rapid scale. And just last week, we announced that we broke on the record in commercial fusion with neutron yield, which is essentially the useful byproduct of a fusion generator. And the way that we're different, essentially, there's two main points. First is we're commercializing technology that has been, decades, that has received decades of investment and billions of dollars by, the U.S. national labs and national security community, and we're commercializing it. And second, fusion generators are useful today to produce radiation that is used to safeguard things like electronics, materials, in the case of radiation events that could be natural in outer space or hostile, which means like human-made radiation. And so we have fusion generators that are operating today and that are servicing customers, and we're excited to continue building the path towards better generator that are more cost-effective and continue to increase the energy efficiency.
You have a 1 terawatt fusion driver, Titan, and then you have what you call the most efficient pulse neutron source, Phaeton, and now you have $100 million. What's the development arc for those technologies? Where are you focused right now?
Yeah, we're continuing to build more generators. I think the way, when you think about fusion, there's been a lot of scientific progress, but now it's a race to commercialization. And the way you commercialize something like a fusion technology is you have to build a lot of generators. So we're continuing to use this capital to accelerate the rate of development and continue to build more generators faster and also more cost effectively. We're also, this round is helping commercialize some of the generators we've already built. So we're starting to host customers at our facilities that are essentially using those generators like Phaeton X and others to test how the electronics and other materials survive under those conditions. And actually just yesterday we got our license for a new generator in Albuquerque, New Mexico, actually where our new facility is, where we're starting to prepare to host customers as soon as next month.
I've also, JC, come across a lot of skepticism. Different timelines for when this becomes a mainstay at scale, 2030, beyond 2030. What's changed in your ability to move faster, or the attitude of this country to the technology, in recent months and years?
When you look at what's happened in the recent few years, so there's been, the US has built amazing fusion infrastructure in the late 1990s and early 2000 at the end of the Cold War. And since then, it's been a few decades where we haven't really built new large-scale facilities. Meanwhile, in China, the race is, China is investing almost 2-to-1 when you factor in the purchase power. In China, 2-to-1 to the US. They're also graduating, on factor of thousands more STEM PhDs than the United States. So the race is really hot with how fast China is building. They've got a lot of facilities. What's changed in the US now is there's commercial private companies like Fuse that are essentially building with Silicon Valley speed and culture, but while having really close ties and deep expertise from the national security community. And we believe that this industry needs more like power generators more than PowerPoints. There's a lot of companies out there was maybe billions of dollars and great plans and plans and PowerPoints, but we're actually building generators that work today, and we need to do more build out right now because that's really where the race is going. And you look at how much China is investing, it's quite daunting. But the only way that we win in the United States is when you look at commercial startups that can bring the cultures like Silicon Valley that can build fast.
Yes.
Is how we can get there.
Channeling your inner Alex Karp on the PowerPoint point. Let's talk about those expertise. Tell us a bit about your background, JC, and the team that you've put together.
Yeah, so I started the company in lieu of going to college about 7 years ago, but I've been doing research in fusion since a pretty young age. Well, we've gathered a team with expertise from some of the leading companies like SpaceX, Palantir, Tesla, as well as some other folks on the team that come from the top places and within the U.S. national security communities, whether it's the National Lab, the Department of War, or national security leaders across the United States. And we're continuing to add more leaders from companies that have actually built and shipped what people thought were impossible at the time. And as you think, Fuse is trying in a way to become to the National Nuclear Security Administration what SpaceX has become to NASA, which is like a commercial provider of critical technology, and that requires a lot of skill in the private sector. So we've gathered an amazing team from some of the best companies who have commercialized technologies that were seen as almost impossibly hard before they were done.
$100 million raised from the likes of Tamarack, Mantis, Abstract, Buckley Ventures, and a few notable individuals. JC Btaiche, founder and CEO of Fuse, thank you so much for your time. Now, coming up, the historic trial claiming Meta designed features to encourage compulsive and prolonged use by young people continues in Oakland. We'll have the latest next. This is Bloomberg Tech. The trial alleging Meta deceived the public and exploited children on its platforms is underway again today. Attorneys for the 29 states suing Meta called their first witness yesterday. Bloomberg's Madlin Mekelburg is following the case and joins us now. Let's just summarize what we learned in day one of proceedings.
Day one of proceedings were opening arguments, so we heard from both sides kind of laying out their roadmap for what we can expect for the rest of the trial. And you're right, the states called their very first witness, who was Arturo Bejar. That's a name that might be familiar to folks who follow Meta and news about this youth safety question. He's a former safety researcher at the company who left in 2021 and has spoken before Congress and at many other trials against Meta about his concerns about safety and his experience raising those safety concerns to executives at Meta. He says they did not take him seriously when he tried to address those issues and tell them that they needed to make some changes. And he'll return to the stand today to continue testifying.
I think it's probably worth, given that we have a few weeks to go in this process, the sort of legal arguments here. There are both state laws where the states accuse a breach, and then there's a very specific federal law violation that is alleged against Meta.
That's right. So there's two categories of claims here. The first are consumer protection claims. Those are the state level claims. Those are about states trying to say that Meta has been a deceptive business and that they've made violations of this state law. And then there's this Federal Child Privacy Protection Act that the states also allege that Meta violated here. And they're saying that Meta had users under 13 on its platforms, and it was knowingly collecting data from those users in violation of this federal law. So two really distinct categories here that set this case apart from some of the other ones we've seen against Meta, which have been personal injury cases claiming harm to a specific individual for their experience on the platforms.
Bloomberg's Madlin Mekelburg, who will continue to follow this trial for the next 6 weeks or so. Thank you very much. That does it for this edition of Bloomberg Tech. Don't forget to check out the podcast. You can find it on the terminal as well as online on Apple, Spotify, and iHeart. Essentially, we're halfway through the week, and it is a big week in the world of technology. Thanks for watching. This is Bloomberg Tech.